The reason why I want everyone to start from higher time frame when they are analyzing the market, it is because of you have to know the actual direction of the market. This one is jump 100 index from volatility. So let's go to monthly time frame. As much as this chart doesn't look nice on a monthly time frame, but you have to go there to check what actually happened. Remember, whatever we do in the market, we are being led by whatever that happened on our left hand side. So we have to pay attention to our left hand side to see what is it we had there that caused the market to change the direction. Because if you fail to understand what happened on your left hand side from higher time frame, you might miss the direction of the market. You'll find yourself taking a loss. That's the thing that you need to observe. All right. Um, let's go to the left hand side so that we can see what happened. Remember, whatever you do, hence I said you need to pay attention to your left hand side. So let's move to our left hand side to just check what is it we had there. Let's move to left hand side to see. Uh, let's check the left hand side. On our left hand side, if you check, this is where the market is right now, but this chart doesn't look nice. Let me try to zoom in again. If you move to your left hand side, there's a continuation pattern there. There's a continuation pattern on your left hand side. Let me just adjust this one to go up. If you move to your left hand side, there is a continuation pattern here. So I'm going to take this one to the right hand side, right? I'm still on monthly time frame. So I'll zoom out. I will zoom out and move with this one to my right hand side. All right. Now let me zoom back again. Now you can see what happened here on monthly time frame. I'm moving from monthly to weekly now. Monthly from weekly, this is monthly time. I'm sorry, this is weekly time frame. This is weekly time frame. This is what we get on weekly time frame. This is where the market reacted. Let's add the horizontal line from the right hand side moving to the left hand side. If you check from the right hand side, of which is this one here, of which is this one, if you check here and then you move again to the left hand side, you'll also see that on our left hand side we have something there. This is weekly time frame. That's the main reason why the market is reversing as it was going up. So now from there, what do we do here? We also have to check if the market continues to the downside, where the market's gonna turn. Remember, we prepare everything from higher time frame. So if you check somewhere here, you have your breaker structure. If you get your breaker structure here, that means the market might come down to roughly this level. Therefore, what can we do now? You erase again, you move to smaller time frame, of which is going to be daily time frame. Now I can remove the one I added above, of which is going to be this one. I remove, I go to daily time frame. Always remember, take your time when you analyze, prepare for your entries before you find yourself jumping in. Right now, we are on daily time frame. This is what I kept on talking about. This is daily time frame. Someone will just come here and be like, okay, there's a continuation pattern. That means we are pushing the market up without understanding the direction of the market from higher time frame. You'll find yourself looking for buy opportunities. You will find yourself looking for buy opportunities where else the market is moving on the downside. So what happened on daily time frame? The market reacted on the continuation pattern. As the market reacted on the continuation pattern, a new continuation pattern was formed that confirms that the market will push to the downside. A new continuation pattern was formed that confirms that the market will continue to the downside. If you don't know what a continuation pattern is, go to my previous videos. You'll see what a continuation pattern is. So right now, here is your drop. Your drop is fully formed. Your base is fully formed. your drop again is fully formed. So now what do? You wait for the market to roughly reach this level and then look for buy opportunities if you want to continue to buy. But remember the overall trend for now, the market is coming down. You go to monthly time frame, the market is moving to the upside. So what you're going to see here, the market will move down to this level. Why this level? This is your broken resistant. It's supposed to become our what? Our support on the right hand side. Therefore, the market will move to the downside. Always remember, your higher time frame is very much important in whatever you do. I'm still on daily time frame, right? Can you see that? So hence I said, whatever you do, you need to start from a higher time frame to understand what is actually happening. So now what we're going to do, we will move to smaller time frame, of which is going to be 12-hour chart now. So this is our 12-hour chart. If you look at this 12-hour chart, you check here. This is what you do when you prepare for your entry. Now, this is what you do. Do the same thing that I am doing here. You notice that here the market left a drop, and then there's a base there, and then there's a drop again. The pattern is fully formed. The market went down, I'll erase again. The market went down to roughly this level. And then the market went up again. Why was the market going up? It was going back to the base that they left there. And then the next thing, the market went down. Now, if you will remove this continuation pattern, what else did you get again? Or what else do you get? You get a trend line that was broken. Add your trend line like this and push it up. Now, I'm on 12-hour chart. If you get a trend line that was broken like this one, you know very well that whenever you are out there trading a trend line that was broken or trading trend lines, you know very well that whenever they break your trend line like this, they will come back and test your broken trend line to show that, oh, now we are moving to the downside. So whatever you did, if you took a loss there, you were buying, wait for the market to come back and give you another opportunity so that you can step in and continue with the market to the downside. All right. Now, let's move from 12-hour to 8-hour chart. This is MT4. This is I'm sorry, this is MT5, not MT4. So now we're moving to from 12-hour to 8-hour chart. Always remember, take your time. Don't rush to buy, don't rush to sell. Prepare in advance. For an example, this is the mistake people do. People will just look at look at this two candlestick and assume that no, the market is very strong, pushing to the downside. They'll assume that this is where they're supposed to continue to sell. The market might reject anytime. So avoid jumping on a moving trend. Rather, wait for the market to open the opportunity for you to step in so that you can get in safely and continue with the market to the downside. So now let's move. This is 8-hour chart. If you're on 8-hour chart, add your horizontal line like this. The reason for me to add this horizontal line, it represents this as a support that was broken. At the same time here, what is it you got? Yeah, you got your support. It was broken, supposed to be tested as a resistant. You got your trend line. It was broken, supposed to be tested as what? As a resistant again. I mentioned this before that whenever you are trading support and a resistant, it is the same as trend lines as well. If the trend line is holding above, that's your support. If it is holding below, that's your resistance. Same thing when they break your trend line. So your trend line is going to be broken. They will hold where? Below. So now what do? This is 8-hour chart. This is 8-hour chart. To those who don't have much experience with time frames, 8-hour chart represent one candlestick every 8-hour chart, right? Same thing here. Same thing. You're gonna see a new candlestick over and over and over and over. Né? So now let's move to smaller time frame, of which is going to be roughly 6-hour chart. This is 6-hour chart. You check on 6-hour chart, the market is approaching this as what? As support. So what are you going to do here? You add this one as your support. You can also mark it like this, or you can mark it as a zone. It is still fine. It is up to you as well how you want to use this one. But what I do when I approach the support or the resistance, I just go to the line chart to check where the market turns specific, of which this one is jump 100. This is where the market turns specific. This is where the market turns specific. That's where I'm going to place my what? My horizontal line. So this is where my horizontal line is. I go back to the candlestick. I cover the candlestick and the wick as well. No? Candlestick and the wick as what? As a zone. So what you can do here, you can just wait for the market to come back to this level. Now, I'm saying to you, whatever you're going to be doing here now, whatever that you're going to be doing here, it's fine. I can remove this one for now. Whatever you're going to be doing right now here, expect that the market will respect this support. And you can see how the market went down. This is 6-hour chart, no? This is 6-hour chart, jump 100 on 6-hour chart. So now, when you check here, the market went down and then it changed the direction. As the market was going up, it came back down. The market turned here. How many touches we got on the trend line is 2 touches. The next thing, the trend line was broken. Now, forget about the trend line. Pretend as if you don't see the trend line. What do you have there? A support. It was broken. This support supposed to be tested as what? As a resistance. Now, you have traders that are trading support and resistance. They will support and resistance. They will step in and do what? And sell. You have traders that are trading trend line. They're gonna do the same. They'll step in and do what? And sell. Why? It is because of their trend lines was broken. That's price action. Whenever your trend line is broken, you must know that they'll come back and test it. You can go and verify that information. It is there. You can go back and back test. You'll find that. Now, I repeat this one. This is 6-hour chart. Don't jump in and sell here. Just because of you know that the market is coming down to this support. You'll jump in and sell here. The market will go up. You'll find yourself taking unnecessary loss. Wait for the market to come back to the support. This is the safest place where you can do what? Where you can buy. So wait for the market to come down to this one before you do anything. If the market reverses, reverse with the market. You know that where is your take profit. How do you get your take profit in this scenario? You move to the left-hand side. Hence, I just explained that we have two things that will hold the market while it will be pushing up. You notice that, oh, this trend line was broken. This support was also broken. Therefore, that means the market will go back to this level. Now, I'll also show you as we'll be going to smaller time frame that this is where you don't have to jump in blindly and sell. Remember, there's a trend line that needs to be tested up there. So we need to also check what happened before the breakout whenever we are approaching the break of structure. Hence, I mentioned that there's a support that was broken there. So let's move down with the time frame, moving from a 6-hour chart to 4-hour chart. This is 4-hour chart on jump 100. All right. The trend line, it is very much visible. Our trend line is very much visible. Can you see that? And then this is where we're expecting the market to push up a little bit. Now, if you look at this scenario, this is what you'll also see. This is 4-hour chart. Most of the time, people just trade on daily and 4-hour and 1 hour going to smaller time frame. People are not familiar with 8-hour, 6-hour and 12-hour chart as well. So what they're going to see here, let's use a line chart. You'll see this is your line chart. According to my line chart is accurate. Now when it comes to support and resistance, that means this is where our support is on 4-hour chart. Hence I mentioned that majority people, they don't prefer to use 12-hour, 8-hour and 6-hour chart. They just go straight to 4-hour chart. So let's go back to the candlesticks. Now if we go back to the candlestick and remove this trend line a little bit, this is your support. Your support was broken. Can you see that? This is your support. Your support was broken. This is your support level. I've mentioned this, and if you don't have my ebook, you are not familiar with what is going to happen here. The market is approaching our support. As the market is approaching our support, it will do something like this, and then it will go up again. If it goes up, here is your support. Your support was broken, supposed to become a what? A resistance on the right hand side. People will step in here and sell and place their stop losses just above and expect the market to continue to the downside. Can you see that? Of which is something that is accurate when it comes to price action. But now there are things that you need to check as well before you step in and do what? And sell there, right? Now let's continue. Let's continue. Let's continue. Let's continue so that you can see what I am talking about. Let's continue. If you check, you look closer. Let's put back the trend line. Let's put back the trend line. We're gonna put back the trend line. As we put back the trend line, what do you see again? Now, what's your expectation? The market must come to this trend line. I'm sorry, to this support, and then it will go up. This is where our breaker structure is, right? If you're gonna find yourself selling here, you'll forget about this trend line. They might spike up to that trend line. Why? This is 4-hour chart. If they spike up to that trend line, where is your stop loss? Your stop loss is gonna be roughly there. The market will kick you out. The next thing, the market will move to a direction. Why did the market did that? It is because of this trend line. And if you go to smaller time frame, you might get something here, but we'll just keep on going to smaller time frame so that you can check what happened here. We'll keep on going to smaller time frame. Guys, before you take your entry, always take your time, prepare. Don't just jump in and buy. Don't just jump in and sell just because of you want to sell. Take your time. This one might give us good opportunity around 10, if not 10, around 11 to 12. So what you're going to do here, actually, let me not just assume the market might just push down. That's where you're going to get your entry. You'll wait for the market to give us, to touch this support before you take your entry. Né? Wait for the market to come down to this support. Don't just jump in and take a decision to buy or sell. Né? Let's move to 3-hour chart. Now, going back to what I explained, if you've been following me for a while, you've heard me saying your job is to pay attention to what happened before the breakout. So if you pay attention to what happened before the breakout, this is your breakout here. Support, it was broken, supposed to become the resistance here. Remember what I said. Remember what I said when it comes to paying attention to what happened before the breakout. Here is your drop. Here is your base. Here is your drop again. The pattern is fully formed. As the pattern is fully formed, people will just step in here. Hence, I mentioned that people will just wait for the market to come down and go back to the breaker structure. They will start selling here and place their stop losses above. Remember, those who are new in the market, they don't want to find themselves taking losses. So they will just place what? They will just place their stop losses just above where they're supposed to get in and place their stop losses above. Why above? There's a continuation pattern above that is also matching with the trend line. So they are higher the chance that they will push the market to their stop losses. The next thing, they will push down. To those who don't have much experience in the market, they will assume that the market is hunting their stop loss, but the market is not hunting anyone's stop losses. The market is just moving to the continuation pattern. Uma lezi zinto lezi ungazazi, kulula ukuthi ufile ngathi the market is manipulating you. It is because of awukakayiboni and you don't know how to use this one, right? But uma sowukwazi ukuyisebenzisa, now you know that, okay, on this support and resistance, I don't have to just jump in here. I have to wait before I get in. It is very much easy to wait, guys. Just wait and observe what is happening here. Don't just jump in just because of you want to trade. Wait for the market to move up to this level before you take your entry. Ukulinda, guys, is very much important when it comes to a market. Now, it's very much important, and also go through all the time frames. Ungasabi ukuhamba wonke ama-time frames. Hence I mentioned that whatever you do, start from higher time frame, understand ukuthi market yakho isuka kuphi, iyaphi, yenzani, and then you move to smaller time frame. You take ama-entries that are also corresponding with the direction of the market, and then uzoba right uma wenze njalo. This one is Deriv, guys. Deriv, for those abangekho familiar, Deriv works 24/7. Awuvalwa Deriv. The only thing evalwa is withdrawals. You can't withdraw over the weekend, but the market is working. Hence, you can see there's a movement there. The market is moving. The market is working. So ningakhathali. Now, from 3-hour chart, we're moving to 2-hour chart. There are things that you're not gonna find on other time frames, and you'll assume that they are not gonna work. and then you'll find yourself taking losses that you're not supposed to take. If you manage to go through all the time frames, there are things that you're going to find. Avoid uzithola uthatha ama losses, angithi sharp. This is 2 hour chart. We don't have much right now on 2 hour chart. This is what you need to observe. Ne? Let's move a little bit. Now, uma uzobuka laphayana and then move to the current price, we have a supply and demand. Hence, I mentioned that most of the time I'm just using experience. So now this is your supply and demand. Uma uzoyibona laphayana, and then you look at the current price go market. And then what do? You don't, let's assume you don't know how to trade this one. Eh? You just look at the market and then you notice that there's a support there. The market's supposed to come back to this support. You step in, you sell here, expecting the market to come down. The supply and demand decide to push the market up. You see, now uzithole uthatha a loss that you're not supposed to take. Hence, I said, as avoiding ukuthatha ama-entries la ngamele siwathathe khona. Avoida ukujumpa in ku-moving trend. Uma uzofunda ukuthi awujump in ku-moving trend, ila uzocala khona ukuthi ube safe with ama-entries wakho in most cases, yabo. So whatever you do, just take your time, prepare, man. Just prepare, take your time. Amanye ama-opportunity, guys, ayaphela 2 days ungabanga nama-opportunities. Let us normalize that. Let us normalize ukuthi amalanga azodlula ungakabanga ne-opportunity. There's nothing wrong with that. As long as wazi ukuthi ku-market trader in. For an example, if you are trading a head and shoulder, if you don't see any head and shoulder on any particular pair, do not buy, do not sell. Whatever that you are trading, it is not there. Iyona into ezokwenza ukuthi ube profitable leyo. But now uma uzovula i-chart lakho and look at this downtrend, you notice that okay, this is 2 hour, the market was going down, it is roughly here, and on my left hand side there's nothing that shows that the market will just reverse. You start selling here just to ride along, the market reverses. You assume that the market is going up, you start buying, the market goes down. You feel like Flipper was wrong to buy, the market is moving to the downside. You start buying here, you start selling here, the market goes up. Uyabona ukuthi uzithola ugcilazeka in all the angles. So for you to be safe, mawungena ku-market, you must know ukuthi u-trader in. If you're out there u-trader i-head and shoulder, look for a head and shoulder. If you're out there u-trader mhlawumbe sithi ama-double bottom, ama-double top, none, look for this. This is what you're looking for in the market. If you don't see this, you don't buy, you don't sell. If you don't see this, you don't do anything with market. This is the only thing that will make you profitable in the market. It doesn't matter who good or trader in. Whatever that you are trading, if ungayiboni ku-market, awungazihluphi ngokuthi uthathe ama-trades. Leyo nto leyo yona ezokwenza ukuthi uthathe isikhathi ukuthi ungabi profitable. So whatever you do, take your time, prepare. Njengoba kade nginitshengisa ngithi mina, this is a top-down analysis. This one iyofika I don't know what time here, but uma ingafikanga there, I'm not gonna take any chance to buy or any chance to sell. Once ifika la, that's when I'm gonna take a decision. Nginitshengisile ngathi mina from u-4 hour ngathi observe ukuthi kunani laphayana. There's a trend line that was broken. On 3 hour, there's a continuation pattern as well. Now, this is your support that was broken. These are the things that you need to observe. Once you guys observe this, so it becomes easier as a market approach a support here. So we asked, okay, if I get in here, this is where I'm going to exit. And when I exit there, this is where again I'm going to look for my entry to continue with the market to the downside. Why? It is because of the overall trend for now, it is moving to the downside. Overall trend, if you go on a higher time frame, iyatshengisa ukuthi market yakho it is pushing to the upside. Remember, market yethu it is not moving on a straight line. Imuva kanje, yabo, as it is going up and down. So now, market yethu imove from this to this current situation right now, and then if you move to your left hand side, you'll find this breakout structure on monthly time frame, of which is what the market is approaching right now. So you must know ukuthi market yakho ime kanjani, isuka kuphi, iyaphi. Uma ungakayibambanga yonke lento le, I'll advise you ukuthi ukwazi ukuyibamba because of guys uma uzohluleka uku-understanda i-direction ye-market ama-trades ozowathatha angeke corresponde ne-direction ye-market and uyazi ukuthi uma ama-trades ozowathatha anga-correspondi with i-direction eye-market loko kusho ukuthini kusho ukuthi you'll find yourself taking ama-losses that you're not supposed to take. So the best thing that you can do, avoid ukujumpa in. Ma uvula i-chart lakho, you must know what you are looking for. You start from higher time frame, you prepare about, okay, fine, I can see that the market jam approaches support. I'll just keep on checking. I'm not gonna do anything up until if you go support. Already is support here. I've mentioned this. Ukuthi uma support izoba nama touches are more than 2. Avoid ukusebenzisa that support, ne? Same thing to resistant. Why? It is because of the chances are very high that they will break that support. So now kule scenario le kukuwe ukuthi uzofuna ukuthatha i-entry here on this support or else uma ufeel ungathi awukho comfortable to step in and take a decision to buy here, wait for the market to come back to this level because of now you'll be moving with the direction of the market. And now uma ngizobe ngu-2 hour time frame, you know ukuthi how long it will take ukuthi izofika la, how long is it gonna take moving back up. So uma uzomastera the art of waiting for the right opportunity uba nama-trades are right. But uma kuwukuthi uzofuna ukujumpa in ku-moving trend anytime uzofica uthatha i-loss ebekumele ungayithathi uzokwazi ukuyi-avoid. So I'm not sure if lento engichazayo it makes sense, but if it doesn't make sense, please find any sense somewhere. So but right now let's jump to 1 hour chart. Let's jump to 1 hour chart. 1 hour chart, way to let me zoom out. It looks like this. It looks the same from all the time frames ukusuka phezulu kuya phansi. Now so uyazi ukuthi what you must observe or what you must look for uma ushaya i-top down analysis. And again, as much as you're gonna be looking for whatever you'll be looking for, what is important here is for you to know what you are trading with market. Want to understand that ukuthi trader in, then everything becomes simple. Everything becomes simple because of now you know it. Okay, from here this is where I'll get my entry. So what are you gonna be doing meantime? You'll just wait for the market to come back here. This is where you'll find your entry. If your market checking a figure, let's say for an example we are trading trend lines only. If you're marketing a figure, you're not gonna find any entry here, not unless you get a trend line. For an example, let's just add another one here. Let's add another trend line here. This trend line is also corresponding with the information we have here. Can you see that? How? Here's your first time touch of the trend line. Here's your second time touch of the trend line. We wait for the market to give us the third touch. The third touch of this trend line is also matching with the support and with the support from the left hand side. That means the chances of the market reversing here are very high. So as the market's gonna be reversing here, where is the market gonna go? Back to the broken support on the left hand side. Again, if you are trading trend lines, you do nothing while the market is moving up until the market reaches your trend line. That's your exit point. You wait for another opportunity to push the market down. Why? Your trend line was broken here. I mentioned that whenever you are out there trading support and resistance, if the market is holding above, that's your support. They break the trend line, that's your resistance. Now is support and resistance, it works the same. It's just an inverse. So same thing now with trend line. The trend line yako, you just use it the same. Whenever they will break a trend line, they'll come back and test it. So umsebenzi wakho is to wait. Now here's the trick, or here's the part enzima ku market. You have someone ozobuka the whole scenario, ne? Uyibonile i-first time touch, wayibona i-second time touch, ne? As ayibonile le Shandis, this one was roughly yesterday morning. The market left this second time touch of the trend line, and then it went all the way up. Now you notice that, oh, I have a trend line, it has 2 touches. What do? You wait for the market to give you the third touch. The market will move the way it all wants. You do what? You do nothing if there's no trend line for you. But if you notice a trend line somewhere, you take that trend line, you continue with the direction of the market. For an example, here is your trend line. Here it's just on smaller time frame. So let me just zoom in. It's just on smaller, actually not on smaller time frames, just inside. Here is your trend line. Your trend line was also broken there. The very same thing that I was explaining. Here is your trend line. It's 1, 2. It was broken. They came back to test as a resistance. It was support here. Can you see that? What do you do? Wait for them to come back. This is 1 hour chart. What does that mean? Hence, it is 1 hour chart. This is where they created the trend line, right? You'll see candlestick pushing all the way up, and then the next thing, the market is coming down. After they have broken your trend line, count how many candlestick you got. It's 1, 2, 3, 4, 5. So you waited for 5 hours before you got your entry there. How many hours? 5. Le shandis le yona ehlula abantu abaningi. They can't wait for 5 hours without doing anything. People will just create opportunities that are not there. It goes back to what I said. Let us avoid to jump on a moving trend. This green candlestick that you see, it was once red. Someone jumped in there assuming the market is moving to the downside, of which he was correct. The market is moving to the downside, but where he took his entry, it was wrong. The market went all the way up. This is 1 hour chart. Eventually, he was like, oh, flip. Even forgot to notice that there's a break of structure there. Assume that the market is moving to the upside. Let us continue to buy. You continue to buy here, the market moves to the downside. But now, if you understand everything, it becomes easy. You know where to get in, you know where not to get in. Same thing if you check here. Here is your first time touch of the trend line. I'm sorry, this is your first time on your left hand side. This is the second time touch of the trend line. What do? You wait for the market to come back to the trend line. You take the decision to push back the market again back to this trend line. Sengikhathele guys ukuniprovela ukuthi i-trend line isebenza kanjani. Sengizochubeka nje ngiye phambili. Most of you abanye sebayisebenzisa i-trend line sebayakwazi ukuyisebenzisa iyabasebenzela. So if you're out there you still believe ukuthi i-trend line ayisebenzi, I'm sorry, I cannot assist you. But nje ngizokutshengisa ukuthi i-history is what you'll keep on seeing over and over and over. Wena umsebenzi wakho nje ukuthatha le information uyi-apply ku-chart lakho. If you're out there you still feel like no, you can't tell people ukuthi ama-trend lines ayasebenza, then I'll ask you a simple question. What happened there? What happened there? This is 1 hour chart. So let us avoid ukuthi into uma singayi-understand singayifundi ne samene sefunda something that you don't understand, sibe ne-clue ukuthi siyisebenzisa kanjani for us to be safe when you're using that thing. Here is your resistant. Here is your resistant. I'm just using this one as a resistance, but it's a trend line that has 2 touches, right? Here is the break of the trend line. They came back to the trend line. They rejected to the upside. If you're out there, you feel like trend lines are not working, okay, no problem. Can assist you. Now, sesibonile ukuthi how do you approach this one? If you're out there, you're trading on Deriv, always do lento engiyenzile. This is not for Deriv only, ne? So this might be your entry for today. Observe ukuthi kwenzakalani today here. Observe ukuthi kwenzakalani. More especially if you do not have a strategic market, wait for the market to come down here. Even if you are not going to buy, just observe what is happening there. I think that will also assist with your confidence when it comes to these price action patterns. Just observe. Just observe. This was jump. This was jump 100. Let's move to volatility 75. Let's move to volatility 75. Always remember, guys, whatever you do, go market, take your time. Don't just jump in just because of when I'm feelings wako ati we are buying now, ne? Sharp. Let me erase chat lamlis over clean so that you can see, because even if I were to explain here, there are things that people are not going to get it. So let me erase. Let me erase a little bit. Chat lako must always be clean, ne? There was a time this one, but are you color? If Google, I can see few of my students are available here. If you recall, science life with the market is approaching what? This break of structure and this continuation pattern. Can you see that? Sasi life, if uyakhumbula, you remember the market moved yazmovela phambili. Now uma uzobuka yonke ke le scenario ekanje ne, you know ukuthi market yakho ishaye i-movement ekanjani. And remember the patterns ekade ngikutshengisa wona ngale or trend lines and hence I mentioned that I've been assisting or trying to share this information ngama trend lines and all the stuff. Unfortunately angeke ngikwazi ukusiza wonke umuntu because of ama-beliefs wethu are not the same when it comes to market ne. So if ama-beliefs wethu are not the same when it comes to market, that means I cannot assist everyone. That means I cannot assist everyone. So uma ngingake ngikwazi uku-assista almost everyone, lo ozodinga usizo akathathe this information I apply. Simple. Now asibuke la ukuthi kwenzakalani. Let's do a top down analysis on let's do an analysis on volatility 75. I'll do the same thing I did. Start from monthly time frame, go down with the time frame. Start from higher time frame, wehle ne-time frame yakho nje kanjalo. The reason for doing that, it is because of you want to check the actual direction of the market. Once you get the direction of the market, everything becomes easy because of now you know where the market is headed. Now whenever you're going to be taking decisions, you will take decisions that are corresponding with the direction of the market. I'm not sure if we are moving together, or I'm not sure if I'm making sense on that. So whatever you do, don't forget to start from higher time frame. Do not forget to start from higher time frame because of if you start from higher time frame, you will see almost everything in the market. Unfortunately, my network is a bit slower here. I don't know what is happening. I don't know what is happening. Let me just try to move with the time frame. Perhaps it will open. If you are using MT4, I'm sorry, not MT4, MT5, please just add these time frames then. Can you see my time frames? Sharp. If you don't know how to add these time frames, I shared how to add time frames like this in the market before. All right, this is let's move to monthly. On monthly time frame, we don't have much information. This is our monthly time frame on am I so? Let's see. Let's try to check ukuthi what is actually happening. Remember, I've mentioned that whatever I do in the market, I just pay attention to the left-hand side. So my left-hand side is just a bit far, so I'm just paying attention to that left-hand side to see what is actually happening, right? This is my left-hand side. This is my left-hand side. I can see that here, this is our support level, right? This is our support level. Now we will move along with the time frame. Let me make this one a bit accurate. Let's move to weekly time frame. Let's move to weekly time frame. Always remember, don't just assume. Ne? Also look at the structure of the market to learn what is actually happening. So for an example here, you add your trend line from here, pushing the trend line all the way up. As long as you're out there, you like to say, hey, I'll just say good luck. Here is your trend line on weekly time frame. The market went all the way up. The reason for the market to turn up there, it is because of the continuation pattern on our left hand side that pushed the market down, okay, of which is what we are looking for. No problem. What do we do from here? We move to daily time frame. We move to daily time frame. I'll repeat this one. Whatever you do, take your time when you analyze. Ne? Don't just rush. Take your time. You notice that this is the beginning of a new trend. Can you see what we got here? Supply and demand. That means the market is still on a potential of going to the upside. But what are we going to do right now? Let me use this horizontal line. This is your support level. This is daily chart. I'll remove this one and leave this support. I'll remove this one and leave the support. So this is my support level. As this is my support level, I need to go to smaller time frame to check what is actually happening here right now. The market is approaching the support again. Now, this is 12-hour chart. Hence, I mentioned the last time in life, nothing, Whatever you see in the market, there's a reason for it, right? Why? The market was going down. You can see this huge candlestick pushing down, right? The reason for the market to 10-year specific move to your left-hand side. Here is your support again. All right. It was a resistance there. It was broken. It became your support there. Now let's move together. Now, as you had your resistance and then your resistance was broken, it became your support here. As the market was going down, it reaches this support as the first time touch. It came back as the second time touch. Now you get in here. The $1 million question that you get now, if I'm going to get in here right now, where am I going to exit? You notice that, oh, as the market was going down, what is it you get there? A continuation pattern, but you cannot trade this one because of it is on 12-hour chart. Can you see that? You cannot trade that one because it is on 12-hour chart. But what can you do? You can just go to smaller time frame to just check. Before you go to smaller time frame, use your line chart. Use your line chart as the base like this. And then you go back to smaller time frame. Look at what happened. The market went straight to the base based on the line chart. That's your entry. And then we'll go to smaller time frame to pay attention to your stop loss as we're going to be going down. I'll explain more. Sorry. To those who still believe that trend lines are not working, I'm not going to say much. I'm just going to leave that one there, and then I'll move down with the time frame. This is the information you got here. As you got this information, take your trend line like this again and push it to the upside like this. Why like this? The market gave us a touch here. It went all the way up to this trend line. It came back down. It went up again. It came back and gave us another chart touch. This is 8-hour chart now. 8-hour chart. How many touches we got? We got 2 touches. The 2 touches we got confirms that we got a trend line there. The trend line was broken. This one, you go to smaller time frame, it's a break of structure. You go to smaller time frame, this is your break of structure. It goes back to what I was explaining on jump 100. Use a line chart so that you can see this is where the market actually turned. Use a line chart, you'll see that. This is where the market turned. There's a support that was broken there. So now, hence I said earlier, ukuthi uma uzohluleka ukupay attention to what happened before bezobreaka laphayana, uzozifica uthatha ama-losses ubungawa-preventa. You step in here, you sell, you place your stop loss above. The market went straight to your stop loss and above. The next thing, the market went down. Oh, the broker was manipulating me. It went straight to my stop loss. The next thing, it went to my direction. Did not understand what they did there. Simple. Once you understand what they did, you know that you're not going to step in here. Your entry is going to be where people are going to place their stop losses, and then you move along with the direction of the market. Yeah, ngiyahameka ngaze ngikhanywa yini. Shothi ngikhuluma kakhulu. Let's move to 6-hour chart. This is our 6-hour chart. 6-hour chart still confirmed. Let me adjust this one nicely, accurately now. I can zoom in so that you can see, guys. It's wrong. Now it's accurate. Can you see that? Accurate, visible, clear. Your touch, your touch. It was broken. It was tested again to show that we are moving to the downside now. This is your breaker structure. We are born over to why I keep on saying higher time frame is very much important in whatever you do in the market. Higher time frame is always important. Unfortunately, kunamanye ama-opportunity engakwazanga ukuwathola here because iviki lesibuyekile I was a bit busy, but so njengoba sengikhona manje, I'm just observing ama-opportunity. I see what happened. I know it, okay, from there uma ngizothi ngifuna opportunity ngiyithola phi. So that's why we are doing a top-down analysis, and it's been a while ngingaphosti naku-YouTube, guys, as in iviki lami beliyi-mess, but it's fine. We're gonna work manje. We're gonna work. Iviki lami, it was a mess. All right. Now, uma uzobuka le shandis again here. This is the breaker structure. Ne? As this was the breaker structure, ngayishaya lesa segroupini ngasho ngathi resistant, it was broken, isizophenduka in i-support here izo-reverse. I-reversile ngempela vele, it went up. Now this is your first time touch as your support, angithi imarket yakhe inyukile yenza whatever ifuna ukuyenza, yabuya yenza ku-support again, round 2 ya-rejecta again. Now as i-rejecta sowuyile kuma-higher time frame, sowubone ukuthi structure sakho sime kanjani, uyazi ukuthi okay, uma izobuya la izobehave kanjani in most cases. So what we're going to do now, sizomova ngama-time frames. This is 4-hour chart. Let's move to 3 hours. Your checker, what is happening here? What is happening here? Let me see if I add a trend line ukuthi ingitshelani laphayana phezulu. I-trend line yami, it was not tested. I-trend line yami, it was not tested. So what you're going to do, you'll just wait. You'll just wait. Let's move again to our chart. 2-hour chart, straight to the point, guys. Let me erase the chart a little bit clean. 2-hour chart, guys, clear. This is pure price action. Almost you understand that yonke into yakho iba lula. For an example, this is a perfect example of what I was saying, guys. Ukuthi uyabona njengala, this is 12 hour 2 hour, man. Look at this. Can you see that? This is your support. Your support was broken. Here is your continuation pattern. The market was supposed to just move to the downside. I know so many people are gonna say that. This one, it goes back to why I kept on saying, whatever you do, use your higher time frame. Whatever you do, use your higher time frame. On a higher time frame, you notice that the market's gonna turn here. You come to smaller time frame is saying that the market's gonna turn here. We are born Noguti, why I keep on saying higher time frame is important in the market compared to smaller time frames. Those who were trading on smaller time frames here, they took losses because they were expecting the market to go down. You can even see how the market behaved here. For how many hours? 2, 4, 6. For 6 hours, the market was just moving up and down. Just a few range, the next thing the market went up. And then as soon as the market went up, this is the setup people got. It's like this. And then as soon as the market break above this consolidation, we have people that will wait for the market to come back and then they're going to buy. Why? It's a breaker structure here. The market will continue to the upside. Now, in this scenario, it was the opposite. The market just went up. The next thing, it went down. Why? It is because of their higher time frame is pushing the market down. This one will only work if the market is going up eventually. Then they're going to break and come back and test and move to the upside. Always use a higher time frame ukuze ube ne-clue ukuthi kwenzakalani. Once usebenzisa higher time frame, yonke into yakho iba clear, yonke into yakho iba easy ukuthi ukwazi ukuyibona. So you can see the break, the consolidation there. It was just broken. It was just broken. So what you can do there, or what you are supposed to do, angithi wena usayanga ku-higher time frame, you took your loss here, the market went up. Yakugaya loss, wabuya usho hayi break structure wabhaya yaba i-downtrend. Don't worry. La sine continuation pattern. I-continuation pattern yethu itestwe ubani? I-market yethu ivale la. Yathi uma iceda ukuvala la, yanyuka yabuyela back yazotesta i-continuation pattern as your entry. Move to the downside. This candlestick that you see, it was red. You move to smaller time frame, there's a breaker structure there. This is your support. This is ophenduka in resistance. Same time. I think we're gonna see that as we'll be going down in the time frame. You'll just see a just complete structure as the market is moving to the downside. Now, and again, what you see here is a true example of avoid jumping on a moving trend. Someone jumped in here expecting the market to continue to the downside. The market went up. They were like, flip, it's a buy. They started buying, the market went down. They started doing the same thing, the market moved like this. Let's move to 1 hour chart. Let's move to 1 hour chart. On 1 hour chart, okay, let me just finish with this one. On 1 hour chart, now, this is very straight to the point. Use your line chart, you'll see. You have a series of continuation patterns, and then you have a series of the market structure pushing to the downside on 1 hour chart. What you're going to do here, you're going to add orders as the market was going down. Can you see that? Okay, look at this. Look at this. Now, let's look at this again. Let's look at this. The market went down, right? It went up again. It pushed again to the downside. This is the support that I was talking about. Can you see this support? The market closed roughly here. Now, if the market closed here, move to your left-hand side, we have nothing that shows that the market is gonna reverse. Someone stepped there and sell. The market went up. Why did the market went up? There's a break of structure here. Besides the break of structure, there's a continuation pattern as well. That confirms that the market will push to the downside. Okay, sharp. We're going to ignore this continuation pattern. We move. We missed that continuation pattern, right? The market went down as well. Now, the market closed here. What is it you got there? Drop, base, drop, fully formed. The market went up to test the base. It's a sell to the downside. Move to your left-hand side. Supply and demand in the beginning of a new trend. The market rejected the supply and demand. It went down again. This candlestick that you see here, it was once red. It went all the way up to test this continuation pattern. What are we expecting? The market to continue to move to this support. Now, if the market will change to the upside, we'll just see by the structure that the market is now moving on the upside. Remember, whatever you do, use what is presented to you. I stop here. Let me stop this one. Let me stop this one. Hey, good evening, Kulum.